Well, hello and welcome to everyone. Where are you coming from in the world? Sorry about that. Shane, my partner, was sharing the video and has load shedding and it was a little bit spotty. So yeah, the internet wasn't great there, but hopefully I'm coming through loud and clear. So Peter, lovely to have you online again. Hope you're feeling better. And a number of people that names that I recognize. So yeah, wonderful to have you all on. Michael, I see that you're there as well. I trying to give you a call. So if you could reach out to me, I'd appreciate that. But for me, it's an exciting masterclass. It's one of my favorite. And it's not necessarily new stuff. So we've done a number of webinars. The last 4 masterclasses we've done have been around new topics, new people, where I've been interviewing people and learning new topics. However, what's important when it comes to investing is the fundamentals don't change. And so, what we decided is that, we wanted to run this masterclass monthly. We didn't run it in September, and we wanted to run it again in the month of October and to go back to the fundamentals. And, we'll talk more about it tonight, but there's so much interesting stuff happening around the world. And, what can we learn from it? And as an investor, what should you or shouldn't you be doing about it? So we're going to go into that tonight. So let's just look here quickly and see. We got Cape Town. We've got, where else? Come on, tell us where you are in the world. I always love people participating. Fantastic to engage. So let me share my screen. Let me get the PowerPoint up and ready. We're all ready to go on my side. So I am currently in Cape Town myself. I've come down. Oh, where's the presentation gone now? I've come down for a number of meetings, and I am actually, oh, perfect timing. So I've come down for a number of meetings, and I'm actually here at my mom's house in her study. So yeah, this is me coming live from Cape Town. And what we're going to be doing tonight is the Diversification 5.0 Masterclass, the 5 important lessons from the wealthiest sophisticated investors. In terms of one of the things that I think is really important, and I wanted to start with a little story. Many years ago, I got Hannes Dreyer to come to London, and I was so intrigued by his property presentation, and the intention was that, him and I were going to work together, and I was going to do his presentations in London. And when I watched, day one, it was like the first time I saw the presentation, I was like, okay, I get it. I understand everything. And then I watched it the week later, and I watched, him do the presentation again. I was like, wow, like I only picked up like 50% of that. And then I watched him do it again, and then I realized, wow, like I'm only at 60%. And then I watched him again, and I was like, wow, I'm only at like 70%. And I think one of the things that's important when you're talking about the fundamentals and the not the basics, but the really the pillars upon which investments built, is that they don't change. And equally, if you've heard something before, just be very conscious with your mind to go, rather than go, I've heard this before, actually to go, well, these are the important pillars, and maybe I can learn something new. So I think that's a very, very important realization that I had years ago in terms of the process. So let me rock and roll here in terms of where we're at. We've got Prince Albert, we've got Cape Town, and we've got Mackay. So cool. So a question for you. I always like to get people in the room with a question. And my question is, what would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? So give it some thought. If you want to type in the chat box, go for it. I always do this consciously to get people in the room. What would it mean to you? Not to me, not to someone else, to you. If in 12 months or less, you were earning $5,000 passive income without any hassle or complexity. And I've had a number of people ask me in the past, well, is that per day, per week, per month? It can be per year. It can be whatever you want it to be, whatever your aspirations or goals are. But I want to ask what difference it would make if you had globally diversified passive income and it was coming into your bank account with any hassle, without any hassle or complexity. I've got a second question for you, and that is, how would you like a system which statistically will help you get there 5 times faster, safer, and simpler? So tell me in the chat box, if there was a system that could help you achieve that, would you be interested, yes or no? And I want to be very clear, there's no such thing as a get-rich-quick scheme, and this certainly is not that. However, there are tried and tested formulas that you can copy, and you could kind of do it the way I did it, and I'm going to go into this in more detail, but, through trial and error and effectively take decades, in my case, over 14 years, and you make a lot of mistakes, or you could copy what others have done successfully. And that's sort of the logic of how you can look at a system. Okay, so we've got a number of yeses, which is great. So something that I believe in is living a life unlimited, ultimately being able to have the choice, having your wealth protected, having a plan B, having peace of mind, and ultimately having the freedom to be able to make the choices. And one of the beliefs that I have is, how do we do that? Well, we do it through diversification. And so I want to start by talking about a story, because I think this is quite a relevant story. And I think, it sort of epitomizes what I'm talking about. So it's a story of two brothers. And the first brother was, in Zimbabwe. It was 1976. And he decided the future of the country wasn't for him. And so he was going to move to South Africa. And so he literally packed everything in a car. It was a car that looked exactly the same as this. And in those days, you weren't allowed to take any money out of the country. And so he literally packed whatever he could in the car and moved to South Africa, and arrived in South Africa with whatever they could fit in the car, and continued then to live a life of reaction, where he was kind of a cork on top of the ocean if it comes to, the political environment, the economic environment, and even the social environment. And so that's really interesting, in terms of being reactive to what's going on in the world. The other brother was proactive. So in 1980, he decided he didn't want to leave Zimbabwe, but what he was going to do was he was going to start investing offshore. And 23 years later, in 2003, he decided it was time to leave Zimbabwe, and he wanted to move to Australia. And most people think you can't get into Australia over the age of 50. You can buy your way in. He bought a passport and, effectively got a passport. He bought a house for cash in Brisbane in a nice area. He sent his kid to one of the top private schools in Australia. Subsequently went on to do a lot of rowing at some of the best universities around the world. And what I always joke about is that he never had to work for an Australian. And, people laugh at me with this, but I think there can be nothing worse than working for 20 plus years and building your career and everything else, and then literally going back to starting again. And so if you look at the two brothers, and I ask you the question, which brother would you rather be? And the question is, the one was very reactionary, with no plan, and because of that was very susceptible to whatever happened in society, in the economy, politically, etc. The other one was very proactive. And again, I told you there's no such thing as a get-rich-quick scheme. It took 23 years of planning, 23 years of proactivity. But that, being proactive allowed him 23 years later to have the freedom to make the choices that he wanted for him and his family. So my question to you, do you want to be brother number one, the reactive brother, or do you want to be brother number two, the proactive brother? And I'm consciously asking you questions because I'm wanting to engage your brain. You've given up your most valuable asset, which is your time. And so I want to make sure that you're engaging your brain and you're getting the value. So Yuko, you say proactive. Samacha says a little bit of both. Mark says proactive. Peter said both brothers combination. What else does everyone think? Yanela says brother number one. Darren says the proactive brother. So yeah, it's just interesting. Again, these things don't necessarily have a right and a wrong. They're just real life stories, in terms of, decisions. So, to finish that story, the first brother, the reactive brother, was my father. And my father moved to South Africa in 1976. And he did what we were all taught to do. He went to school, he went to university, he got a good degree. He ultimately became financial director of a listed company. He invested, he paid his taxes. And, we're all taught that's what we're supposed to do. Work hard, invest, pay your taxes, trust the financial industry. And yet when my dad died at the age of 59, he was broke. And I went and did some research on it. And statistically, at the age of 65 in the Western world, so that's England, Australia, and America, 94% of people will be like my dad. They'll be dead, they'll be broke, or they'll be reliant on the government. 5% of people will be financially independent. And, again, if I'm in a live room, I say to people, hey, who wants to be financially independent? And most people put up their hand. If I ask you, do you want to be financially independent? Yes or no? You don't have to answer. Just consciously in your mind say yes or no. And yet what's interesting is if you go look at the financial industry, the statistic for financially independent is that you earn 25% less than your last paycheck. Now, I don't know which way you look at that, but the way I look at it is you're 25% poorer and you effectively are financially trapped, which means that only 1% of people, so if 100 people start a race, it doesn't matter who wins or loses the race, only one person is actually finishing the race. And so I decided at a very young age, this was me on my very first construction site when I was 13 years old, my first property project. And I decided at a very young age, I have to do it differently. I can't do it. I can't do what I'm taught. I can't go to school. I can't work hard. I can't get a degree. I can't go and get a corporate job. I'm not doing it. I've witnessed it. It doesn't work. And so I went out and did something different. And I'm sure there's many of you here that went out and did what I did. I went out and read, Rich Dad, Poor Dad and Real Estate Riches and, Think and Grow Rich. This book here, Think and Grow Rich, and Unshakable and, Money Master the Game. And I don't even know the number, but probably 400 other books like it. And I went and did a huge amount of courses. And, we all, if you know what Rich Dad, Poor Dad is, there's the E, the B, the S, and the I quadrant. And you got the employee, the self-employed, the business owner, and the investor. And I don't have time tonight to go into all of it. If you haven't read the book, I highly recommend it. But at the end of the day, we're all trying to figure out how to be the investor. And so for me, it was buy houses. That's what I was told to do. And so I went out and, I read this book by Dr. Dolph DeRoos, Real Estate Riches. And he says, look at 100 houses, make an offer on 10, get accepted for 3 and buy one, walk the streets, blah, blah, blah. And I thought I had to do it all on my own. And like I said, for 14 years, I went and read every book I could. I went on every course I could. I did every degree. I have an honors degree cum laude. I have a master's degree cum laude. I have CRS, which is the top property qualification out of America. I have ARPP out of England. I have PDP out of South Africa. You name it, I've been there, done that, got the T-shirt. And what I found fascinating was it was only in 2010 that like the light bulb was switched on for me. And I realized that I didn't have to try and do it all myself, and that there was a much, much easier way to get there through partnering. And so my one thing, and my strong recommendation is you take notes while I'm talking, but my first real lesson for you to take away is that you can do it all on your own. You can try and figure it all out on your own. You can be like me. You can take decades. You can waste a hell of a lot of money. You can lose a lot of money. And it's a lot of hassle and it's hard. Or you can do it, what I've learned over the last 12, 13 years is the easy way, and it's through partnering. And you get to choose. Do you want to do it all on your own, or do you want to partner in that process? So where did it all start for me, and how did I get to that epiphany back in 2010, 2011? Well, I did my first property project when I was 13. You've already seen a picture of me on it. I did my first development when I was 22. We bought a house and knocked it down and put up 6 townhouses. I did my first London development when I was 24. We bought a property and we converted it from a 3-bedroom into a 5-bedroom. And from there, at 25, I started International Property Solutions, where we sold thousands of houses or apartments in South Africa, hundreds in England, hundreds in Australia, and hundreds in America. But they were all houses and apartments, because I didn't think I could get into commercial. Every book you read on property or real estate says you must get into commercial, you must get into commercial. But I didn't know how. I didn't have the knowledge, I didn't have the money. And it was back again to the epiphany moment of 2010, 2011, when I realized the way to do it was through partnering. And, when you look at the problems that most investors have, the 99% are not investing like the top 1%. We're stuck in country. There's massive barriers and hassle. There's tax, there's complexity, there's banking. And because of all of this, all the barriers are up there, which is why people are just stuck thinking, I need to buy a house, I need to buy an apartment in terms of the overall process. And what happened to me in 2010, 2011, often you have these epiphany moments. They're not through choice, they're through pain. And it started in 2009. So we had the crash, the global financial crisis, the GFC in 2008, 2009. And there was this opportunity in Wimbledon, London, where I could buy 48 units. And these properties were cash flow positive. They were built, they were tenanted. It was like an absolute no-brainer. We could buy them at a 40% discount. And there was one small problem. I went out to our investors and I said, guys, this is a no-brainer. If you look down the bottom here, this is an email I sent out. I don't care what happens with market values in the short term. This represents a real opportunity. And there was one small problem. We needed 10 million pounds. And I ran around, I spoke to all the high net worths I could, and I just couldn't bring it together. And so I lost out on that opportunity. And I remember going to the developer and saying, listen, I can't buy all 48 units, but I can at least buy one. And they just laughed at me. They literally laughed me out the room. Now, to put in perspective, those properties we were buying them at 160,000 pounds. Now, anyone who knows Wimbledon knows that you can barely buy a garage door for 160,000 pounds. And those properties are now trading probably around 750,000 pounds, whatever that is, 14 years later. And so it's that type of pain where I realized I can't do this on my own. The only way is to partner. And it happened again in 2009. It was a medical building, and I met these two wealthy people, and they were investing in medical. And I said, why medical? I'd literally done all the degrees like I told you, and no one had ever told me medical. And they said, well, think about it. No matter what happens in the global economy, people need doctors. Secondly, doctors never leave their premises. And thirdly, doctors are good at being doctors, but they're not accountants. They're good. They pay, nice rents. I was like, geez, that's a no-brainer. Why has no one ever told me? How do I participate? And I said, no, it's easy. We're raising $40 million. There's 8 slots of, $5 million each. And again, I, ran around trying to get investors, couldn't. And I couldn't participate with $5 million on my own. And it was that pain that led us to ultimately create Wealth Migrate, where we could bring investors together and we could invest like the institutions. And we did our first deal in 2014, which was 6 buildings in a medical portfolio. It was a $16 million deal. We had to raise $6 million in equity. And that was my first experience into commercial property. So it's 10 years ago now. And it brings me back to, in the past, before that, I was trying to do everything myself. Whereas now we did it through partnership. And by the way, all the investors did it through partnership. And I'm going to explain to you why that's so important, because even if you had $10 million, the chances of you flying to America, finding a good deal, being able to run that deal, be able to get access to good finance are like zero. They are zero. The only way to do it and to get, great results is through partnership, from my experience in terms of that process. So yeah, we've had a long track record now. We've helped, investors in 71 countries. We've facilitated 1.3 billion in deals, with many millions invested and many millions paid out in terms of the overall process. But one of the things that I think is important is that, whether you want to talk about America, England, Europe, Australia, South Africa, or many other places on the planet, we're not stuck on one place. I believe that as an investor, you should always be looking at the best countries, the best markets, the best cities, the best sectors, versus an estate agent who's going, buy in London, buy in London, buy in London, because London's always good. That's rubbish. No place is always good. No sector is always good. I'm going to talk a bit about medical and how I thought medical was bulletproof. And then COVID came along and it took an absolute hiding in terms of the overall process. But why do investors invest and diversify? The first thing is about protection of wealth. It's about wealth preservation. The second is about a plan B. So, you don't have all your eggs in one basket. The third is about peace of mind. So whether it's the crisis in Israel right now, or the Ukraine war, or the raising of interest rates in countries, you're not susceptible to any one country's major issues. And ultimately, I believe it comes down to freedom of choice, so that you can make the right decisions for you and your family in terms of going forward. So, we live in fascinating times. If you take the last 12 months, we've had the Ukraine war, we've had inflation at an all-time high, we've had interest rates rising, we've had fuel prices going up, we've had the stock market all over the place. South Africa's had load shedding, and if it wasn't, interestingly enough, Hamas decided to attack Israel, and now we've got another war potentially on our hands, just to keep things very interesting as we go into October. I will say one of the things, I'll talk more about it, later, but as part of the mastermind, one of the things I look forward to most is we get a monthly analysis from the team at Calio. And our session is actually next Wednesday. And I love it because I don't have to go and read, 500 documents. I don't have to go and watch the BBC for hours and hours, or CNN, or whichever one you choose to try and get the truth. And, within half an hour, Anthony comes, gives us and the mastermind participants a full synopsis. What's happening? What do we need to know in the world? How's it impacting our investing, etc. And I find it absolutely fascinating. And, I can't wait for next week to get that update in terms of, what they perceive as the impact of this whole Israeli conflict on the overall world economy. So no matter what you look at, no matter which crisis you look at, it ultimately points back to diversification in terms of the overall process. We believe that you need to diversify across countries, currencies, assets, partners, and time. And it's all about globally diversified passive income. That's why it sits in the middle. And it's so interesting. People say to me, even partners, number 4. They go, why partners? Well, a number of medical investors, including myself, have learned this the hard way, because although they were diversified in a number of different buildings, it was all with the same partner. And the problem is, if the partner falls over, all the investments fall over. So there's a reason why, we believe you've got to diversify across countries, currencies, assets, partners, and time in terms of that overall process. So just to talk a little bit about the pain of not taking action, many people, and they say this to me all the time, oh, I came to a live event, or I watched a webinar, I've seen you talk. I had a gentleman come to me and say, oh, I saw a presentation for property in England in 2008, 2009. I wish I'd taken action, etc. And, so whether it's these live events, there's been small ones, there's been massive ones with, over 2,000 people. But I've always tried to share the knowledge. I've always tried to share what is happening on the ground. How are people investing? What do you need to know? How do you avoid the mistakes that people are making? And, for me, when I look at it, and whether it was live events or whether it was webinars with Neil Peterson or Dr. Dolph DeRuis or Clem Santa, I always say to people, well, some people took the information and actually took action, and others didn't. And my invitation to you is let's not have a conversation 10 years from now where it's like, Scott, I've been listening to you for 10 years. Let's rather have the conversation that I listened to you, I took action, whether that's together or not, I don't really care. Obviously I'd like to work with you, but I'm more interested in you actually take action, based on the information that you're learning. So some stats on that action. And according to Harvard, if you literally just, come along and attend a masterclass, 3 months from now, you're not even going to remember 10% of it. If you actually do some sort of working environment, and by the way, we've got a challenge coming up at the end of October that I highly recommend you come and join us, because that's where you get active, you're part of a community, you participate, you've got a 30 to 65% chance. And if you're part of a mastermind type environment, you've got a 95% chance. And that's what it's all about. It's about, there's no point in having the knowledge. It's about actually, using the knowledge and being completely empowered yourself in terms of the overall process. The last thing I'd say around the pain of not taking action, there was a gentleman I met, and he said to me, Scott, I've got my money, I've got $12,000, and it's sitting in an Alan Gray account, which is just a money account, and it's earning me 7%. Now, by the way, that was in Rand terms, but I'm not even going to bother with, exchange rates. So I said, well, if you're getting 17%, I said, you should be aiming for 15%. And I'll explain a whole bunch of assets where you should be on average getting 15%. And I said, if you take 10 years, if you take the money that you've got invested and you take 10 years, the cost to you of not taking action is about $57,000 in today's money. So in today's money, taking into account, time value of money and everything else. And so one of the things that people are often weak at is they battle to kind of see the impact of not taking action in 5 years' time, in 10 years' time, in 20 years' time. And the question I have for you is, are you going to take action and get the results you want? Or are you going to kind of have reasons and excuses and whatever? And my invitation to you is do the calculation. Do the calculation of the impact that it's having for you in terms of not taking action. And that's one of the reasons we created the mastermind. And I'll talk more about it later. But ultimately, it's for people that wanted to take action. It's for people that wanted to work closely with me in a coaching accountability environment. It's for people that ultimately, like to have their hand held together in a group of like-minded people and ultimately want to get results quicker. Generally their time is very, very time poor. And what's important for them is to be able to get the results safely and simply as quickly as possible. So that's why we created the mastermind. If it is of interest to you, just type in their mastermind and the team can come back to you. But I'll talk a bit more about it later once I've shared the 5 lessons in terms of that overall process. So the 5 important lessons that I wanted to share with you that I've learned, and not only through studying books and courses and hundreds of different methodologies of how I've learned, but it's also by just watching some of the wealthiest investors from around the world. And for me, there's 5 things that you can learn from any time like at the moment. The first one is trends. The second is risk. The third is diversification. The fourth is structure. And the fifth is team in terms of the overall process. So let's look at these. The first being trends. So I work a lot with James Painter, and he actually wrote chapter 2 of my book, Property Going Global, that came out 10 years ago. And what was interesting is that James, and just by the way, just like I said to you, if you want to just type in the chat box, if the mastermind interests you, just type in their mastermind. If you want a copy of the book, just type in their book, and the team can come back to you and give you give you the resources. So what's really interesting is that James looks at these different trends in terms of where the world's going and what's happening, and he literally looked at the stock market, and he gave a presentation to our mastermind and our wealth hacker community, and he said, the stock market could lose anywhere in the region of 50 to 85% over the next couple of years, and you can see here in terms of this trend analysis. Now, again, you can have an opinion, or you can look at trends. And one of the things that I love about what James does is he takes the emotion out of it. Whether you're looking at markets, whether you're looking at currencies, he takes the emotion out of it and he starts to look at trends. And if you as an investor are working with trends, you're going to be, in my opinion, and based on my research, a hell of a lot more successful than if you rely on the news or on opinions. I'll give you another example. There's a guy called Ray Dalio. So Ray Dalio is probably the person that I would recommend more than anyone to follow in the financial markets. He's got a great book called Principles. And Ray Dalio basically built Bridgewater, which is the largest hedge fund in the world. They manage $160 billion. And by the way, they've managed to get a return of 21% on average per year for 40 years. So in my opinion, he's someone worth listening to. And what he did is he went back in history 500 years and he literally said, what are the major trends that we need to know? And so the first one is that you've got to look at productivity. That's the straight line in the middle. Then you've got the short-term debt cycle, which is 5 to 8 years. You've got the long-term debt cycle, which is 75 to 100 years. You've also got social, economic, and political cycles. And one of the things that's both scary and an opportunity is that all of these cycles, productivity, short-term, long-term, social, political, and economic, are all colliding in this decade. Now, that creates a huge amount of upheaval, which, if you're not prepared for it, can have devastating impacts on individuals. However, if you're prepared for it, and if you've used, the principles which have been used many, many times, because nothing we're doing is the first time, then you can really take advantage of it. And so Ray Dalio, for me, and this book, Principles, I would highly recommend you go and read it. But it's a long book, and I've studied him for many, many years. And I actually gave a presentation to our wealth hacker community, and I said, let me teach you in 90 minutes everything that Ray Dalio is teaching around these long-term, short-term, etc. So if you're interested in the Ray Dalio stuff, just type in there Ray, and we'll try and make sure that we can send you that recording. It's about a year old, maybe even a year and a half, but the principles and the fundamentals don't change in terms of the overall process. So I want to give you an example of this. So in 2008, 2009, the world was falling apart. All the banks were, in big trouble. The insurance companies were in big trouble. And what was fascinating is that, I learned a lesson again. And the reason being is that people tend to look at this. So they tend to look at the curve and they go, oh, my word, the market's falling apart. So London property was what I'm talking about here. And London property lost 20% quite quickly, actually. And so everyone focused on this. But if you look at the fundamentals, if you look at the long-term trend, the fundamentals of London property are very, very sound. And in simple terms, there's more demand than there's supply. And so what happened is the property price lost 20%, but it recovered within 12 months. So within 12 months, it recovered back to the same price, and then it only ever rose from there. So it's a classic example of, do you get caught up in the emotion, or do you look at the long-term trends? And that's what I mean by trend analysis. And I'll give you a real life story. So we bought these properties. We helped 31 investors buy properties in this building. And what was really interesting is that we bought this in 2009. We managed to get a 26% discount. And one of the gentlemen, a guy called Don, bought 4 of these units for £313,000 each. And he sold them in 2021 for more than £1 million each. And the nice thing is, after the building was finished, they were fully tenanted the entire time for the best part of a decade. So you had, positive cash flow for a decade, plus he sold them for over $1 million each. And people say, oh, but it sounds too good to be true and that. And I ask you the question, would you like to buy a property for £300,000 and sell it for over £1 million? Yes or no? And people go, yeah, but it sounds too good to be true. And I go, well, maybe, unless you look at the trends. And if you look here, the Greenwich Peninsula, it's right next to Canary Wharf. They just put a new tube station in, the Jubilee Tube Station. And if you look here, this was an article that literally came out last year. And this one company was investing $8.4 billion in the pounds, in this process, $10 billion. There's 17,500 homes, 84,000 square meters, 20,000 square meters of cultural attractions. And so it just shows you that there was massive trends going in the right direction. And so if you bought now, it's not going to be as good as 10, 12 years ago, when not only was the market taking a hiding, the developers were taking a hiding, so they were prepared to give discounts, but also, so that was the macro, the macroeconomics, but the microeconomics, it was a developing area, and now it's really taking off. And that's why property has trebled over the last 10 years in terms of that area. So that's a great example of trends and how you need to know about trends. I'll give you 3 examples of that as well, or another example of that in Australia. So this guy, Ryan Border, he was a big investor in South Africa, had a lot of buy-to-let property, and he wanted to start diversifying and investing overseas. So he started investing in Australia, and he bought a number of properties in Melbourne and Brisbane. And what was interesting there is he bought, 4-bedroom, 2-bathroom homes, because that's what mom and pop Australia want to live in. That's what they rent. And 5 years later, he immigrated to Australia. He's able to sell those properties. He now lives on the Gold Coast, and it gave him the whole ability to get going. And why is that related to trends? Well, what people don't realize is that the best performing property market in the G20, so the top 20 economies in the world, in 2009, 2010 was Australia. And the best performing markets were Melbourne and Brisbane. And the best performing sectors within those markets were, single family residential homes. So it's just another example of how trends work. And I know Michael's actually online. And, what was interesting back in early 2013, Michael came to a breakfast, no dissimilar. In those days, we did breakfasts rather than webinars, but no dissimilar to this. And, my understanding is he wanted to invest overseas. He wanted to diversify. So he did it the old way. And that was to come on an airplane. So he jumped on an airplane, he flew over to America. And, I'm sure you're aware, but the American property housing market had taken an absolute beating in the last crash. And so we went to a whole bunch of different cities, etc. And I'll never forget, talking to Michael, and he said, look, I was very, very skeptical, when we started off. And, I didn't, but I knew I wanted to invest overseas and I wanted to diversify. And it was very interesting for me because he was very, very clear on why he wanted to do it. He wanted to be able to give his daughters the freedom. So he wanted to create the passive income so that his daughters had the freedom to be able to choose to, study and work where they wanted, etc. And what's fascinating is that, Michael invested in houses and then, diversified into other assets in other countries, etc. And what's awesome is that, now him and his family are actually, immigrating to England with his daughters. So he's achieved his objective. And I love it when, he actually made a comment on the chat box earlier this year. And he said, when I joined, it was the best money I'd ever spent. And funny enough, he sent me another message more recently. He said it would never have happened if I tried myself. And I think this is what I was trying to say to people, is that you can do it on your own. In fact, I know a lot of people that have done it on their own, but often there's so many challenges that you face. Trust me, I know, I've done it myself. Or you could partner, and we've all learned, and don't get me wrong, it's not perfect. Things don't work, and etc. And you learn these lessons. But that's the beauty of a collective. When things don't work, you figure out how to fix them, and you make sure that you don't repeat the mistakes. But it's not one person learning, it's a collective learning together. So I'll give you one last thing around trend analysis. And for me, if you look at my book, I actually spoke about this in my book, but we do a huge amount of research in terms of the macroeconomics, where the world's going, what's happening with all the trends. I can take you through all of this, and I do in our course, Wealth Going Global. I literally teach you how to go and find all the research. But if we start investing in Australia here, we start investing in England here, we start investing in America here, in terms of that process. And if you get it right once, so be it. If you get it right twice, but once you start to do it, over again a couple of times, there must be some substance to the facts and the fundamentals versus people and just their opinions. And I love sharing the data. And in the book, Property Going Global, I actually shared the data and where to find the data. But in Wealth Going Global, which is the 10-year upgrade, the digital upgrade, I've literally gone in and I've taught people how to do it themselves. So if you look at the markets and you look at the returns, some people say, oh, but I should just put my money in the stock market. And what's interesting is, according to the regulator in America, if you take the stock market, which is in gray, the S&P 500, and private equity has actually got better returns over the last 25 years with less risk. And, you can see the returns here. And, we've sort of consistently over the last 10 years got about a 14% IRR in terms of the overall process. So if you're interested, I can talk more about it at the end in terms of Wealth Going Global. But that's why we built this course. So it's a home study course, and you can literally go in and it will teach you. There's literally 6 modules, and you'll literally learn how to choose the top 5 countries to invest in. You'll learn the top 5 currencies to invest in, including if you're interested in cryptocurrency. You'll learn the top 15 assets that you should be investing in. You'll then learn how to find the right partners and avoid 80% of the mistakes that others make. And don't get me wrong, I've made a lot of mistakes. I and other investors, like together, I've made mistakes. So rather than repeat those mistakes, like what have we learned from them, and what have we done to make sure we don't repeat those mistakes, so that you don't even have to make the mistakes? Then time. How do you build a plan? We call it a wealth plan, over the next 5-10 years. So like Michael, where he was clear on the outcome he wanted, how do you turn those outcomes into reality? And then finally, smart investing. How do you use technology to make it easier? I've got a smart watch, I've got a smartphone, a smart TV, a smart fridge, a smart everything. Why don't we use technology to make our investing better in terms of that overall process? So, when you take trends, probably the last person I want to talk about trends with is Clem Sunter. And, I love Clem Sunter. I've had the privilege of working a lot with him. He actually wrote the foreword in my book, Property Going Global. And he's one of the best scenario planners in the world, top 5 scenario planners in the world. And, he talks a lot about scenarios and flags and probabilities. And it's all about where the global economies are going. And so for me, again, as part of Wealth Going Global, we actually interviewed him and we said, what are the latest scenarios for the global economy? What are the latest scenarios for South Africa? What are the flags you need to know? What are the probabilities? And so all of these trend, help people make better decisions. And, I created a 4-dimensional model where I could take Clem's scenario planning, I could take the global research and data, and then I could make better and informed decisions. And that's what I, wrote about in the book, Property Going Global. And then I've learned a hell of a lot in the last 10 years, and a lot's changed in the world. And that's why I created Wealth Going Global to provide people with that, with that knowledge, basically. So that's the first one. And I know it's a lot, but trends are so, so important. The second one is risk. And one of the great stories is old Warren Buffett. And it's fascinating because, again, the world was falling apart in 2008. And my uncle had money in Barclays Bank. And I phoned my uncle. I said, why, what are you doing? And he said, no, I'm investing in Coca-Cola. And I was like, why Coca-Cola? And he said, well, think about it. They're diversified all over the world. They're in over 100 countries. They're in many different products. And the best part is they pay a good income. They pay good dividends. I was like, wow, that's absolutely fascinating. And then a couple of years later, I read a book called Snowball, which is all about Warren Buffett. And for the exact same reasons, he owns 50% of Coca-Cola. I started to realize the next really important thing, which is about managing risk. I had a personal experience in 2002. So you can see in March 2002, I bought this property over here with a friend of mine. And all our other friends told us we were absolutely mad. We just had September 11th. England was going to war with Afghanistan. Oil prices were going up. Inflation was going up. Interest rates were going up. And everyone said, oh, you're crazy. You're going to go bankrupt. And I remember saying to my friend, well, if we turn it from a 3-bedroom into a 5-bedroom, then it's going to be cash flow positive. We're going to have a nice, buffer. And I realized, without even knowing it at the time, that when you focus on income, you can mitigate risks dramatically. And what I've learned over the last 20 years is that the middle class and professionals focus on capital growth. They try to buy houses, they're going to go up in price. Or they try to buy Bitcoin and hope it goes up in price. Or try to buy shares and hope it goes up in price. And the middle class and professionals focus on capital growth. But it's like betting against winter because things happen and then prices go down. Whereas the wealthy focus on income. And it's the income that helps them manage the risk and ultimately give them the freedom. And so that was the property. We put a conservatory on. We turned it from a 3-bedroom into a 5-bedroom. And that allowed us to have a lovely margin and to be able to manage that risk. And it was no different with the medical buildings. In America, as I told you, residential properties took an absolute hiding, as much as 70% in Las Vegas in 2008, 2009. And yet the medical buildings kept performing and paying all the way through. Now, again, if you'd heard me say that 4 years ago, I would have literally said medical buildings are bulletproof. And then came COVID. And, from my experience and some of our partners, like medical's taken an absolute hiding in the last 3 years. And the reason being is that, my brother's an anesthetist and they stopped doing elective surgery for the best part of 2 years. And so all our tenants that are all in the medical buildings couldn't work. And so they stopped paying their rents. And, and the big lesson I learned again, and again, remember that we're all learning, no one knows everything, is that even though I thought medical was bulletproof, it's not. No sector anywhere in the world, no country, no city, no sector, no partner is bulletproof, which is another reason why you need to diversify. Because even if you've got resilient income from one asset class or even one partner, sometimes things happen. Black swan events happen, like COVID happened. We had the same problem with aged care in the UK. And yet something like this, which is an office building in Tampa, in Florida, this is run by a company that's been going 42 years. They manage $3 billion. And their logic was, well, we can buy office buildings on the cheap in the COVID crash. And you got all these people coming down from Chicago and New York, etc. And they've actually been running, nearly full occupancy right through the COVID period. We actually closed this building in December 2020 with them, and it's been paying dividends each and every quarter. So it's a classic example of how you manage risk with income. And another good, person that did this was a lady called Hilda. She came over on a buyer's trip and she started investing in commercial buildings. And I actually managed to get her invited to Necker Island. Her and I went with Richard Branson. And that holiday for her was paid for by the passive income that her properties were earning. And then finally, she decided to move to America, and it actually gave her the freedom to move to America and for 2 years to kind of establish herself on the ground. So just a classic example of when you focus on income, you can manage your downside risk so much better. The third one is diversification. And interesting enough, according to Ray Dalio, and I've already explained who he is, the single most important component to financial success is diversification. And, again, he goes on to say that you need to diversify across asset classes, within asset classes, across markets and currencies, and across time in terms of the overall thing. And he's got a formula. And, it's interesting, he never shared his formula, with anyone. But when Tony Robbins did this book, Money Master the Game, he interviewed 50 of the wealthiest people in the world, of which Ray Dalio was one of them. And, Ray Dalio was, I stand to be corrected, but like 75. And he said, I'll finally share it. Now, I remind you, this guy manages $160 billion and has achieved an average of 21% a year for 40 years. Can we agree that if someone's done that, we should probably be trying to learn what they did and copy it? Yes or no? Just let me know. I want to see if you're listening. Yes or no? Should we be copying what Ray Dalio is doing? Yes or no? I can see lots of yeses coming through. I'm glad everyone's listening. I'd be a bit worried if we got a no. So what Ray Dalio's secret formula was, is you need 15 uncorrelated bets and an attractive array of assets that don't move in tandem. Reduce the risk by 80% and the risk return ratio increases by a factor of 5. And what's fascinating is that the majority of people, like the moment they hear that, their brains switch off and they say, oh, I've got no idea what that means. But actually all he's saying is that you need 15 quality investments. You need 15 quality investments in attractive assets that don't move in tandem. So basically you just need 15 quality investments that don't move in tandem. So like an example, if you own 4 houses, they move in tandem, because if the house market goes down, they all go down. If you own, a whole bunch of shares in a stock market, or even in different stock markets around the world, if the New York Stock Exchange crashes, trust me, the London Stock Exchange crashes generally. So, they move in tandem. So the secret formula was you need 15 uncorrelated bets in quality assets that don't move in tandem. If you do that, you're going to reduce your risk by 80%, and you're going to increase your risk return ratio by a factor of 5. Now, I'm sure most of you would like to reduce your risk by 80% and increase your risk return ratio by a factor of 5. And can you start to see how, although this stuff sounds complicated, it's actually not complicated. There's literally simple processes that you can follow and implement to help you get there. So I want to share with you a quick recording that he did in a TED Talk.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So again, just to remind you what he said there, and again, you can go look at it. It's TED Talk, 26 minutes in. And he said, you need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the most important thing. So I want to share with you some mistakes that I see people make when it comes to diversification. Number one of the doctors I work with went to see his financial planner, and his financial planner said, no, don't make investments. Don't invest overseas. Pay down your house. And I said, but that's interesting, because if you look at the stats, the rand has, to the US dollar has lost 6% year on year since, literally 1975. And so you're paying down an asset in a depreciating currency. Like, does that make financial sense? On top of that, I see people, doing it all the time, that are going out, and it's really a big thing that happens in South Africa, but also around the rest of the world, where they go buy apartments, and they're not cash flow positive. In fact, they actually cost you money every month. But don't worry, I'm getting great capital growth. And what's fascinating is that it makes no logical sense, because now you've got an asset that you actually have to, or supposedly an asset, you think it's an asset, but it's actually costing you money every month rather than giving you money. And it's, you're betting on capital growth. Remember what I've already said. Plus, you're doing it in a currency that's depreciating. Like, it makes no logical sense. When you look at the Global Wealth Index, which is something that I wrote about in the book, Property Going Global, which is a way for investors around the world to compare where they live to being a global citizen and what they can or can't buy or invest in, their buying power around the world. And I updated it now for Wealth Going Global. And, we literally, you got 1993, 2003, 2013, 2023. The buying power, you can see the impact that it's had on the buying power each year, each decade in terms of it. And it's dramatic in terms of the buying power. And so whether you someone living in Hong Kong and you're wanting to invest in America or, Europe or whatever, it's a very useful way to check what you need to do with regards to currency and currency investment. And then I learned the hard way, because I bought a house, 10 years ago in South Africa, a very lovely house in a place called Teeston Island in Knysna. And, on paper, it looked like a lovely investment. We bought it for 5.5 million. We sold it for 14 million. And, if you look at all the returns in rands, it was a great result, really good returns. And yet when I went and did the maths, and you did it in dollars, I actually realized that the amount of money I invested in dollars back in 2013, if you took the dollar rand rate at the time, which was 9.85, and then I sold at 18.19, in dollar terms, I actually lost $22,000. So literally in tangible dollar for dollar, I lost over 10 years, $22,000 in cash. And what's worse is if I invested that in America at just an average 8%, which is roughly what we get, I would have had 3 times that money. Quite scary, yeah? So again, I don't like to get caught up in opinions. I like to do the maths. So number 2 mistake, and this one I see all the time. Oh no, I'm going to go to London. I'm going to buy an apartment. In fact, people love to do it when rugby's on. They fly over, they watch a rugby game, they buy an apartment. Or something that's happening recently, I'm going to Wales and I'm buying a house, or I'm going to Birmingham or Manchester or whatever. And what's interesting is when you look at it, they end up buying one apartment. They've got one tenant, one management agent, and one income stream. If that tenant stops paying, they're in deep, what. And so it's the proverbial all your eggs are in one basket. Not to say the hassle and all the complexities of residential management that most people know what I'm talking about. Then mistake number 3, and I've sort of already alluded to this, but this gentleman invested in 8 different hospitals through a medical partner. They only help people invest in medical buildings, and they go via the Seychelles, etc. And the point being is that he's in 8 different buildings. You would say, hey, I'm diversified, but the problem is they were with one company, one partner, one income stream, one asset class, one country, and one currency. And that one partner fell over, and none of the deals are paying dividends. And then people say, oh, but I'm not in India or South Africa or China. And what's interesting, if you look at the last big crash in 2008, 2009, the UK lost over 40% against the dollar. Australia lost 46%. So it's not just the small countries that lose. And so again, diversification is really, really key in terms of this overall process. And people say, oh, but, well, I'll put all my money in America. Well, great. But in 2008, if you had all your money in American residential property, that lost 40 to 60%, depending on what market you were in. Or you could put your money into England. And then you had Brexit, and commercial property lost 20% when Brexit happened. Or you could go to Dr. Dolph de Roos, and the lesson I learned from him, the guy from Real Estate Riches, and he had 8 commercial buildings in Christchurch. And then there was an earthquake. And, the buildings got condemned. The insurance, companies wouldn't pay because they said it was an act of God. And he unfortunately went bankrupt. So, if you look at it over and over again, it doesn't matter where you live in the world, diversification is the only way to avoid being caught up having all your eggs in one basket. And that's why we believe a lot in diversification. And, if I look at the last sort of 18 months or so, where, what I've been doing, and, I've invested in 10 different assets across 4 continents, 5 currencies, 9 different asset classes, and 10 different partners, in terms of that process. And that's a great example of what I'm talking about when it comes to diversification 5.0. And what I like to do is work with people and say, well, how would you do it? And so this gentleman, or I actually can't remember if it was a gentleman or a lady, it doesn't matter, had $100,000. And they were like, how would I do it? And we came up with a portfolio with a blend of income and capital growth, with a total return of about 15%. And I showed them, I said, if you leave the money in South African property, or if you leave the money in the bank, or if you put all your property into, one building in London, as an example, what would it mean to you over the next 20 to 25 years? And this for me is a classic example of building a diversified portfolio, what we call diversification 5.0. And a good example of this is Chad. Chad came to Australia in 2011, bought his first apartments there. Then he started investing in America, and is literally diversified, across the world, not just in different assets, but also in different countries, different currencies. And more recently, actually brought a concept to many of our investors called the structured note. And again, it's another way of getting predictable income, and so that you can be diversified. So it's a classic example of how to do it. But you'll notice none of these people did it over a day, a week, a month, or even a year. Most of them, I'm talking and showing you what they did over a decade. But the difference is that a decade ago, they took action. They didn't sort of sit on their hands. They took action, and now 10 years later, they've got the results. So to give an example of diversification, if you look at the total asset classes, as part of the mastermind with Kellyo, we sit every month and we look at all the different assets, so we understand what's going on, what do we need to know. Again, I call it the TED Talk. So it's not a deep analysis, but just an overall analysis. And this was Garth Wellman and Anthony explaining the assets and what we need to know about them.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return, and is the fundamental building blocks of asset management and a financial plan that's going to, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So to give you an example there, 85% of your long-term returns are going to come to portfolio construction or asset allocation, same thing. And so, the question I've got for you is, well, you can do it all yourself. You can do all your own research and, try to figure it all out, or you can do it again together in a partnership, so that you can get, access to the best advice to be able to make the best decisions for you and your family around asset allocation. And to give you just some examples here, if you take private equity versus the traditional, stock market, over 5 years, 10 years, 15 and 20 years, private equity has outperformed the traditional stock market over 5, 10, 15 and 20 years. If you look at the average portfolio, so I don't have time to go into all this tonight, but if you look at risk down the bottom, so risk is on the bottom, so low risk to high risk. And then over here, it's low return to high return. So you obviously want to be in this top left corner. You want to have high return with low risk. Okay, now the financial industry will tell you it's not possible, but it's rubbish. And so most people are kind of in a blended portfolio of bonds and stocks. And so they're sitting in low return, high risk. And just by putting 20% private equity in, you can change that dramatically. And I mean, again, just this next week, actually, we're doing private equity as part of asset class mastery within the mastermind, where we literally will bring in a partner and we will learn exactly what private equity is, what are the risks of private equity, how does it work, what are the opportunities, how do I participate in private equity? And that's why we do the mastermind, so that we've got access to not only the knowledge, but to investment opportunities. The average investor, so if you take the stock market, the average over 20 years is 9.5%. The average investor trying to do it on their own, 3.6%. And I actually, back to that example of that gentleman, I literally showed him the return on investment. And I said to him, the difference of trying to do it on your own versus, getting the right information, the right advice, over 1 year, it doesn't make too much of a difference. It's $400, but over 5 years, it's $12,000. Over 10 years, it's $50,000 plus dollars. Over 30 years, it starts to become really significant. And so you can talk return on investment, you can talk whatever you like. It's really important to get away from emotion, opinion, what your friend says, and actually back to the numbers. And what do the numbers say to make the right decisions for yourself? The fourth thing for me is structure. And this is around tax and structuring. And I bring you up another myth. Again, I've done this for a long time now. I've made a lot of mistakes myself. I've watched, helped many people invest and set up structures around the world. And so I've kind of learned the hard way of school of hard knocks, of what works and what doesn't. And one of the things that scares me, two things that scare me a lot. The first one is that often you go and meet with companies and they kind of got the box solution. It's the Mauritius solution or the Seychelles solution or the BVI solution. And they sort of sell you a concept and you buy into their box. And then they can only sell products that kind of suit their box. And it's very much a cookie cutter thing, and you're kind of fitting in their box. And you've got to be careful of that, because I know a guy that's moved to Portugal and Seychelles and is blacklisted by Europe. And some people argue whether it is or isn't. Doesn't matter. His bank won't allow him to get any dividends out of his Seychelles structure. And so he's got this investment, he's got his dividends, but he can't access them. And so be very careful about what your long-term plans are and tax and structuring. And Garth, and them talk about tax and structuring, and they say, you've got to have quite significant portfolios to really make them worthwhile, in the region of sort of $5 million plus. And so again, my strong opinion here is to get the right advice and not just go to the man in the street, down the road that's going to give you, everyone wants to give you an opinion. Everyone wants to sell you something, but actually what is the best for you in terms of the long term? And a good example of this is Manu. And Manu, is a successful investor, and he went out and he tried to do it himself, and he lost $250,000. And I often say to people, it's not what you necessarily always get, it's what you can save as well. You can do it the school of hard knocks on your own, and you can have very expensive mistakes, or you can, partner with people and you can avoid those mistakes. And he came to us years ago and has been investing with us, and ultimately actually even became a shareholder in the company in terms of that. So the question I've got for you is that when I go through this stuff and I get passionate, I love talking about it, and it's something that I, spent 28 years studying myself. But, in 1 hour, it's very difficult to condense it all. And so often people feel overwhelmed. And my question is, I wouldn't be surprised if you feel overwhelmed. Like, I'm taking 28 years worth of work plus, however many hundreds of thousands, if not millions of hours of studying, et cetera. And I'm trying to condense it all for you in literally 1 hour so that you can understand the fundamentals. And so my question to you, if you're feeling overwhelmed, is I started off this evening by saying, what would it mean to you in 12 months or less to be earning $5,000 passive income without any hassle or complexity? You remember that? And then I said, how would you like a system which would statistically help you get there 5 times faster, simpler, and safer? So I got a question for you. Would you like me to make you a quick offer to show you how you can do this safely and simply? I've shared with you 4 of the 5 major lessons, but would you like me to make you an offer where I can share, show you how to do this safely and simply in the next 12 months? So, you don't have to do it on your own. Someone can actually hold your hand and help you. So just give me a yes or a no. I know how to do it. So I don't have to share it, but if you want me to share it with you, let me know. I'm happy to share it with you. I'm going to take a quick sip of water. So thank you to Anita and Privilege and Hugo, Mark, Augustinus, Darren and Peter. Okay, so let me share it with you quickly in terms of, through the school of hard knocks, I've been trying to learn what works and what doesn't work, and how can we help people get there, quicker, safer, and simpler. So I started off by saying to you, this is about living life unlimited. It's about having the freedom to make the choices you want for you and your family. And how do you do it? You do it through diversification. The formula is, you have to diversify across countries, currencies, assets, partners, and time. But ultimately, it comes down to your passive income. That's what's going to give you the freedom. So it's about your globally diversified passive income. That's the focus in terms of what we're trying to achieve. And I want to share a quick video with you, because I've been part of masterminds since 2011, and I've always found phenomenal impact for me and results for me at being part of mastermind. And I didn't fully understand why until I watched this video.
Now, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen. And you give them a leader to follow who's willing to get in the trenches with them. All of a sudden, you start finding real, rapid life or business transformation.
If you take what he said there, people in groups, change 5 times faster. And what you basically need is a collection of people, so like-minded people who are committed, all driven, and all want to make the right changes happen. And you give them a leader to follow who's willing to get in the trenches with them. And all of a sudden, you find real, rapid life and business transformation. And that was the reason that we actually created the mastermind, because I've been doing this now since 2004. So it's literally 20 years next year. And what I've learned helping others over the last 20 odd years is that a lot of people, there's the do-it-yourself people. And then there's people going, okay, but I know that doing it myself is the difficult way. It takes time. I'm going to lose money, blah, blah, blah. I'm going to make mistakes. Why don't I rather, have it done for me or with me, partnership? And I looked at the masterminds that I've been part of since 2011, where I'd got significant, results. I was like, why don't we offer the same thing? Why don't we help people get results 5 times quicker, simpler, and safer by, literally using best practice in terms of the space? And so we built the mastermind, for people that believe in personal development. They want to be coachable. They want to learn. They want to grow. They want to work with the best, from around the world in terms of getting the knowledge, getting access to opportunities. They want to build passive income. So it's about globally diversified passive income. And my thing is that I want people that are committed to building that income, and at least $5,000 at a minimum. Plus that is the objective. And then it's also for people that already sort of have some property or have some investments, etc. Because this, at a mastermind level, the idea is to kind of help a group of people go to the next level in terms of that process, and really kind of take their investing from where they're at to where they want to be. And in simple terms, what we've done is we've gone back and we've looked at all of the different formulas and systems and what's worked, what hasn't worked. And we sort of come and we said, well, let's help people do it in the fastest, simplest, safest way, but without the hassle and complexity. Back to that story of Michael, 10 years ago, which I know it feels like I'm talking about a lifetime ago, but you had to fly to America, you had to open an LLC, which is a company, you had to open a bank account. There was so many hassles and complexity that to this day, we still are me too, dealing with the legacies of the things we set up 10 years ago. And most people nowadays just don't want the hassle and complexity. Who's it not for? It's not for complete beginners. It's not for people that, are literally trying to learn what rates and taxes are. It's not for time wasters. It's not for people with no capital at all. And it's not for difficult personalities. We're working in a like-minded group. So it's, it's all about us collaboratively, pulling each other forward. And it's really important, the group dynamics. That's the formula that we focus on. So countries, currencies, assets, partners, and time. And it's all about globally diversified passive income. And what we did is, you could take it and you could say it's as complex as you like, but I've learned in life that simplicity is power. And so we've broken it into 5 steps. The first step is that we literally get clear on your outcome. So most people's problem is that they don't know what they want. They have a rough idea, and trust me, I'm a certified, international certified coach. Most people kind of roughly know what they want, but they never take the time to get very clear on the outcomes. Michael was very clear on his outcome. I can remember it. That's how clear he was. I can remember exactly what his outcome was. Okay. But very few people are like that. So, step 1, we help you solve the most important problem, which is what do you want? Step 2 is your starting point. Where are you starting? What does your current property look like or portfolio look like? Are they good assets? Are they bad assets? What does your retirement annuities look like? What is your tax and your structuring, etc.? I had a gentleman just last night say, I've really been looking for an independent financial advisor that could give me good advice based on my retirements and whatever, because they're not working. So you got to know where you want to get to, and you got to know where you're starting. And then You got to build a plan to get, we call it a wealth plan to get from A to B. So, you know where you want to be, where you're starting, and now you got to get from A to B. But the really worrying thing for most people is that they don't have a plan at all. In fact, I'd be surprised with everyone who's here. I bet you the majority of you don't have a plan. But even those that do have a plan, if you take such a simple thing like a New Year's resolution, statistically, 9 to 12% of people that write down their New Year's resolution actually achieve it, and less than 4% if it's not even written down. So even if you've got a plan, one of the most important things to getting results is the accountability, the execution, and the mindset. And so step 4 is now you got your plan, but monthly there's a check-in to make sure that we've got the accountability, the execution, and the mindset. And then finally, step 5 is the investment. It's actually about investing. It's the knowledge, it's the partners, and it's the investments in terms of what you're looking at. And so let's just go into that a little bit deeper. Step 1, as I said, I'm a certified coach. I take you through a process. It takes about 90 minutes. I get very, very clear on what are your top 3 outcomes and what are your top 3 measures, and then you write them down. So you walk away with clarity. What are your top 3 outcomes? What are your top 3 measures? And you write them down. And the way that we do it is that most people are caught up in this, problems of drama, or they're even trying into brainstorm and action. And we say, no, it's none of that. What's the outcome? Get very clear on the outcome. It all starts with the outcome. And so that's the approach we take. And there was a coach out of Germany who's been doing this 27 years. And he literally said, I love the process. I've never taken the time to get very clear on the outcome and what I'm trying to achieve. Step 2, the starting point. As I mentioned to you, you go through the property analysis, and there was a gentleman in England, and he had a number of properties that he's bought over the years. And while interest rates were low, there was no problem. And some of them are negative equity. But now interest rates are rising. He doesn't know what to do. And this is a classic example where, through coaching, you can literally be a mirror. So, he gave me the spreadsheet. I helped him with a couple of, colors and whatever. And I actually showed him. It took about 30 minutes. I said, look, you can sell off a couple of properties. You can use the negative equity, the positive equity in some to offset the negative equity. And just by doing this strategy, you can have a swing from the properties costing you 750, 800 pounds a month to positive 2,000 pounds a month. And you can invest overseas in America and get far better returns with the same capital. So it's a great example of analyzing your current portfolio. I've done it for a lot of people in South Africa, and even some of them think they've got really good performing assets until they look at the numbers and they go, oh my word, like, what am I doing here? So, again, the numbers are power. And then the second part is, family office. So, the best families in the world, the wealthiest families in the world have a family office, and they actually help them with tax and structuring, compliance, and, and financial advice and all of that. And so we work with a family office partner. It's Callio. And Garth Wellman is the CEO and co-founder, and he said the 1% can pay for advice and get results. We need to support everyone else to get the same advice and results. And so we work very closely with them as part of the mastermind. People get access directly to them, and they actually help analyze everything, not just the property, but your overall portfolio, your annuities, etc. And it's very useful in terms of that process. And one of the pain points that a lot of people have is they've been going to different advisors, and they've done it in an ad hoc way, and they've bought a property in London and this and that, and it's all over the place. And what people love is that they can now come and they can kind of get it all under one roof, and they can kind of review all their different assets, and they can come up with one plan. As I said, I think it's so much better now to have one advisor for all asset classes. We had so much duplication, between different advisors' investments. Now we can simplify our admin, our tax, other structures for obvious reasons, but it'll take some time. So, the power of simplicity. So that's point 2. And then, then it's fairly obvious you create a wealth plan. It's where do you want to be in 10 years? Where are you now and how are you going to get there? And I'm making up 10 years, might be, 5 years, 10 years, 20 years, whatever. But it's about having a proper wealth plan to be able to get there. The next step, as I said to you, is the execution of mindset. A lot of people get caught in this away state. Israel gets attacked by Hamas, and suddenly you're withdrawn, fearful, inability to make good choices, demotivated. It's about being in a towards state, happy, ability to think clearly, creative, see new opportunities. And the question is how to do it. And it's very simple how to do it. you firstly, you get very clear on the outcome, like I said. And the second thing is you get in a like-minded community. And so what we do is we work on the mindset, through the 12-month mastermind. We've got different modules in time management and mental wealth, in flow. But the most important thing is the accountability tracker. It's holding people to account so that you're making measurable progress every month towards your outcome. And, also having an accountability coach, myself and my partner, Alex, work very closely in terms of that process. And the statistics are overwhelming in terms of, how much it helps you to get results. Most of you will know already, if you have an accountability partner, if you have a friend or something, you know that you've got a much better chance of getting results than trying to do it all on your own. And then the final step of it is the investment rhythms. And this is where it gets really interesting, because every month we check in. I told you already, we do a market analysis and currency analysis. And I love it. Literally, I don't have to learn. I don't have to go and study every month what's happening with Israel and the impact. I call it a TED Talk. And the Calio team come in and they tell us exactly what we need to know. They look at that portfolio construction in terms of the different assets. And then every month we spend 90 minutes and we go deep into one asset class. So like last month was ETFs. We've done medical, we've done industrial, we've done multifamily, we've done structured notes, we've done gold and silver. This month we're doing private equity, and we go deep into an asset class. We learn from a partner that's been doing it for decades. We understand the risks, we understand the asset class, and they bring us, real opportunities that we can invest in. So, that brings us number 4, which is the investments. And then finally, we review our investments in terms of the process. And so it just gives you an idea of the different things that we do through the process. And the feedback we keep getting from people is, it's amazing, mind-blowing, very valuable, great perspective, extremely enlightening. This guy, Neil, said, I used to be in the dark and now, I'm not in the dark, and it's so liberating. And again, it's speaking the language of investments, not just locally, but internationally in terms of that process. And that's it. 5 simple steps to get people to their outcome. And I always say to people, what happens after 12 months? Well, you return to step 1 and you go back and you make sure your outcomes are right and you go back. So again, 3 months from now, statistically, you'll only retain about 10% of this. And our whole logic with the mastermind is that we're wanting you to get to 95%. And as, Cynthia said, thank God for the mastermind, the partners it brings us, and the exponential learning curve you have gifted us in terms of that process. So, just to give you some idea of some of the bonuses that we give as part of the mastermind. The first one is that you get priority access to myself and the team. The second one is you get access to our currency and tax partners. The third is you get access to our full library of asset mastery. So not only going forward do you come to all the live events, but you also will get the library of all the past ones we've done. So it's really a good understanding of the best asset classes around the world, whether it's structured notes, multifamily, medical, industrial, co-living, gold and silver, etc. The third thing, or the fourth one, is actually wealth going global. So again, we'll actually include this as part of the mastermind. And the reason being is that we want you to have the substance. Not everyone wants to do it. Not everyone has to. You don't have to do it to be part of the mastermind, but we want people to have the substance so that you can make the right decisions for you and your family in terms of that process. I've mentioned Clem Sunter and the recording we did with Clem Sunter so that you can get clear on what the scenarios are, what the flags are, what the probabilities are. It makes it so important in terms of investing and where the world is going. You get access to the 12 months Wealth Hacker subscription. So again, it's all the different subscriptions and a huge amount of stuff that we give you. You don't have to go through it all if you don't want to, but it's about adding different areas. Different people need different things. It's like going to a library and being able to choose the books you need. If you need stuff with time management, boom, here it is, etc., to help you get results in terms of that process. A number of people are thinking about immigration wherever they are in the world. Having done this for 20 plus years, we can point people in the right direction around immigration. And then finally, buyers trips, something we seriously considering again is, with the mastermind, going on buyers trips again, getting on the ground, going to America, going to England, going to Europe, going to Australia, going and meeting the partners on the ground and actually seeing the opportunities real life. So if it's something that appeals to you, literally go to diversificationmastermind.com. I do these calls myself. I literally sit with you one-to-one. It's just an application call. The mastermind is not for everybody. And by the way, we are not, equally so people need to qualify, but equally from our side, we're not for everyone. So what I do is it's just a friendly 30-minute call. I want to understand what you're looking to achieve, so that I can, understand, whether we can help you. And on the assumption that we can help you, I'll explain more about what the mastermind's about. And if there's a mutual fit, then, we can discuss the best next steps forward. So the best way to do it, if it's something that intrigues you, literally go to diversificationmastermind.com. I know that I've opened up some slots tomorrow afternoon. If people are interested, I am down here in Cape Town on business. So I've got a very busy week for the rest of the week. And I will make some slots available next week. If there's no slot that's available at a time that suits you, just go to just type in their mastermind in the chat box, and we'll find a time that suits. Different people watch this. It is being recorded. And one of the things I didn't mention is that as part of the mastermind, we got people in Ireland, in England, in Italy, in Germany, in Australia, in New Zealand, in South Africa, Zimbabwe, Zambia, and even Swaziland. And so we've got lots of different time zones. We've got the most incredible group of people, men and women. And what I love about it is you've got teachers, you've got farmers, you've got electricians, you've got accountants, you've got entrepreneurs, you've got, sophisticated business owners. So you've got a different variety of people from different geographies, and it just brings fantastic context where we learn. And that's actually why I do the one-to-one calls, because my role is to make sure that we're getting the right people. Remember, it's about having that like-minded group of people. And so, it's about making sure that we're getting the right people from a personality perspective, because we interact with each other in terms of the process. So I'm literally looking to see what you want to achieve, and identify any risks that you've got or any questions that you've got, and see if you qualify. My one request to you, I'm making my time available for free in terms of coming along to that chat. My one request is that I only want to work with people that are committed. So please, if you book a time, please respect the time. Your time is valuable, my time is valuable. So I really appreciate if you could turn up on time. And if you make a booking, we spend the time, quality time to have that conversation. And then lastly, from our side, this is not a one-to-many, this is a one-to-one process. And so it is time consuming for me, for the team, and for the Calio team. And so we can only onboard a few people at a time. And we've got a big challenge coming up in 2 weeks' time. We already got a bit of a backlog because there's been so much interest in terms of diversification around the world based on everything that's going on. And so there's, I can only onboard a few people. And so I do the application calls, and I can try and see if we can fit people in, etc. But as we're fast approaching the end of the year, my feeling is there's no better time to get set up now so that you can hit the ground running in January. A lot of people say to me, I'm not going to do it until January. And I'm like, you're crazy. Because then it's like no good business in the world starts planning in January. They plan in Q4 and they execute in Q1. And I'll also share with you, if you book a call with me, I'll share with you how you can save $5,000 because we're expecting, it's our birthday this month for two businesses. So it's Wealth University's birthday and it's Wealth Migrate's birthday. And so we've got a whole bunch of birthday specials and discounts, etc., which will only be available as part of the birthday special. So yeah, book a call. I'd love to see you. I look forward to having a 30-minute chat with you. And, ultimately, I want to understand what you're trying to achieve, and I'll give you some examples of things that resonate for people. They want wealth preservation. They want a plan B. They want peace of mind. They want to get access to the best knowledge. They want to get access to the best opportunities. They're very time poor, so they don't have time to go and, read thousands of things or go on lots of webinars. So they want to condense time. They want to basically, be able to use. And I always say to people, if it's going to take 3 to 4 hours a month, and if you can't invest 3 to 4 hours a month in your future self, like in my opinion, you're never going to get what you want in terms of the process. So, and I could go on and on and on, but I'd suggest, book a call one-to-one and we can talk through it. There's another thing people like, which is the accountability. Again, a lot of people have been watching me for 10 years, 20 years, whatever. and they like haven't actually taken action. They're like, well, Scott, I need you to either be the carrot or the stick, but hold me to account. Like, I want to get results. And, so you got the accountability, you've got the like-minded group of people, so you can learn and grow together in terms of that process. You got access to the family office, which majority of people don't have access to a family office. This is a unique way to get access to a family office. And then it's about generational wealth. It's not just about you, but it's also about your children. So if that resonates for you, my strong recommendation is go to diversificationmastermind.com. Let's book a call, and you and I can have a conversation in terms of the next steps. And just in terms of return on investment, the average person sees 344% return on investment, and businesses see over 700% in terms of that opportunity. And in terms of a satisfaction guarantee, I think you might have realized, it said in that thing, you've got a leader who's prepared to jump in the trenches with you. The one thing about me is I'm 150%er. And so whether it's the carrot or the stick, I'm going to do whatever it takes to help you get results. And don't get me wrong, life happens, things happen to people. And, that's our job to be the mirror, to be the accounter, to hold someone account. And basically, no matter what happens, keep them focused on the outcome and move through the obstacles to get to the objective. And, when you look back at the return on investment, I sometimes say to people, well, and they say, well, I can't afford to do it. And I say, well, can you afford not to do it? If you back to this gentleman who was getting 7% and had $12,000. And I said to him, well, if you literally, if you were to invest $5,000 in yourself, okay, and you take it over 5 years, that's a 250% return on investment. If you take it over, 10 years, it's now 1,000% return on investment. And if you take it over, 30 years, it just gets to ridiculous numbers. And so I often say to people, what can you afford not to do? It's not what you can afford to do, it's what can you afford not to do? And these aren't big numbers. $12,000 in total to invest, and yet you look at the returns over time. So if you are interested, just go to diversificationmastermind.com. And again, we've got different offerings. You've heard me tonight talk about wealth going global and a couple of other things that I can share with you if I don't think the mastermind is right for you. I want to share with you some fun pictures of how we used to do it in the old days. Because in the old days, we used to do these webinars, and you used to come, on a buyer's trip with me, and we'd fly over to America, like I explained, Michael did, and many, many other people. And, nowadays you don't have to do it. You can do it from the comfort of your couch. You can literally watch, webinars. You can be part of the mastermind, and you can get the same results. But this was us in New York in 2013, Times Square. This was me with Dr. Dolph DeRiss. I paid $8,000 to go and spend a week with him. And the reason being is that, the guy that wrote Real Estate Riches, and he was teaching us how to buy properties on the auction steps. So this was on the auction steps, on the houses of the steps of the courthouse. So the auctions on the steps of the courthouse. And he was teaching us how to buy properties. This was in Phoenix. What just happened there? Having a bit of fun, down at the bottom of the Grand Canyon, looking at a show, buying houses, multifamily, opening bank accounts. This is how we used to do it, learning from the partners. You used to have to get on an airplane with me, come and meet the partners and sit around tables and have breakfast, lunch, and dinners with them, in terms of that process. And now you can literally do it, no matter where you are in the world, as long as you've got an internet access. And the only thing we can't do, which is why I want to go back to buyer's trips, is we used to have a bit of fun in the evenings as well. So back in New York, North Dakota, which is where the fracking is, and having a bit of fun on Halloween. And then, these are three of the most successful shopping center developers in Africa. And, they knew they wanted to get into North America. And how did they do it? Did they try to do it on their own? No, they did it through partnership in terms of the overall process. So why do we believe you should work with us? Well, there's many, many reasons that people come up with in their own mind. And I've done this for a very long time. So trust me, I've heard most of it before. But there's three myths. I don't have the time, I don't have the money, I don't have the knowledge. And our logic is we've created the mastermind for people who don't have the time. This is about condensing time. This is about being as efficient as possible with your time to be able to get the results in the shortest amount of time. I don't have the knowledge. Well, that's exactly why we built it, so that you can get access to the best knowledge, the best partners, and you'll be able to make the right decisions for you and your family. And then I don't have the money. Well, again, I often think that people should do an analysis based on where they're at and where they want to be, and can they afford not to make the right decisions for them and their family in terms of that overall process. The last thing as to why we think you should work with us, we're the only one that does global diversification. There's other people that help you do medical buildings in America, or houses in London, or, you know, structured notes, or, you know, ETFs, whatever it is, you know, but then you're stuck in like one geography, one asset class, one partner. And our logic is, why not be diversified? You know, why not be in countries, currencies, assets, partners, and time, but do it simply and safely without any complexity. And so, you know, just from my own experience, I've been part of masterminds, you know, since 2011. I spent $14,000 on Singularity University, you know, with Peter Diamandis all around technology. I paid 25,000 years for many years with Roger Hamilton, which is one of the top entrepreneur networks. I paid 40,000 to be part of Mavericks 1000, and that actually got me invited to spend a week with Richard Branson on Necker Island. This is sort of top entrepreneurs in America. And then I also paid $50,000 to be part of Tony Robbins' business mastery, and this was me in Fiji with him. Now, you know, you look at these numbers and you think, Scott, you're absolutely insane. But I wouldn't spend the money if it wasn't getting a good return on investment. And the return has worked over and over and over again. And that's why we wanted to recreate it and take the best I've learned from around the world and, you know, implement it. And we've now been doing it for over 12 months. And it's you know, amazing what and how, you know, people are reacting to it in terms of the process. So the final lesson I wanted to share with you is your team. And, you know, traditionally, if you want to invest, there was you and you want to invest in a property and you had to go through a financial institution, and there's many, many layers to fees, and you don't understand what you're investing in, and you dilute it, and you're very much correlated with the stock market, which is a major, major issue. So then you say, well, I don't want to do that. I'll tell you what, I want to go and buy a house in London. And there's 16 different middlemen between you and your investment, and there's massive financial commitments, and it's very hard to get mortgages and banking and tax and structures, and that's not even talking about the hassle of management and maintenance. And, you know, so then you go, oh, it's all just too difficult. I don't know what to do. And, you know, then, you know, if you want to go into detail, you know, you got to look at due diligence, you got to look at brokers, you got to look at legals, you got to look at management agents. I mean, this is all the stuff that you've got to do. And I say to people, why not keep it simple and safe? You know, why not, you know, literally have 4 simple steps that you could do in terms of investing, and just remove the complexity in terms of it. You know, if you take the due diligence process, there's a myriad of factors you need to take into account in terms of due diligence. And we've spent millions and millions of dollars over the years, both, you know, investing in due diligence and also learning mistakes of what doesn't work. You know, and so again, you can do it all yourself, or you can literally partner with people that have already been doing it. And, you know, when you look at deals, this was a deal that we did in Phoenix this year. We closed in July. It has 7% cash on cash. It was an industrial deal, 17% IRR, 3 to 5 year hold. You know, if you put $100,000 in, you know, over 5 years, you would look to double your equity, 2x on equity. And, you know, we've got 2 deals coming up now for the mastermind participants. We've got one in Germany, which is an industrial building. It's a 6.5% return in euros, income return with a 13 to 14% IRR. And then we got a debt deal in Manhattan, New York. Yes, you heard me right, Manhattan, New York, which is a 12 to 18 month deal, and it's a 12% return in dollars. So it's just an example of like really good quality deals that are available at the moment that the masterminders get access to in terms of that process. And yeah, to remind you again, when you talk about your team, do you want to do it on your own, or do you literally want to have your own family office that you can you know, learn from every month? You can bounce ideas off, you can ask questions, and that's why we partnered with Calio, so that, you know, the mastermind participants had access to those opportunities. So a guy like Alan, you know, he was a highly successful property developer, and again, he knew that he shouldn't try to do it all himself, so he partnered with us for 10 years, and now is actually immigrating to America and is doing it himself, and that's fine. But that's the way to do it safely and simply in terms of that overall process, in terms of how you do it. So my question is, why not join over 4,000 other investors, whether it's wealth protection, plan B, peace of mind, diversification, freedom, global citizen, empowering your children, immigration, whatever it is, living a life unlimited. If these things resonate with you, my strong recommendation, go to diversificationmastermind.com and book a call with myself, and let's see how we can help you achieve your outcomes. And if you can't find a time, just type in there mastermind in the chat box, and myself or the team will come back to you to make a plan. That's the formula, ladies and gentlemen. If you want to do it yourself, that's the formula. You need to diversify across countries, currencies, assets, partners, and time. What's going to give you your freedom is globally diversified passive income. Globally diversified passive income. And again, you've got a choice tonight. You can do it on your own. You can continue to do what you've always done, and you can hope to get different results. By the way, that's the definition of insanity, according to Einstein. Or you can partner, and you can, aim for a much safer, simpler route without the complexity. And statistically, you've got a 5 times better chance of getting results in terms of that overall process. So it's your choice. Do you want to do it on your own, or do you want to do it in partnership in terms of it? And again, if you want to do it on your own, there's the formula. My strong recommendation is, go and do it based on, the 5 pillars I've explained and taught tonight. Or if you want to do it together and you want someone to hold your hand, that's what the mastermind's for. You and I work closely together. You work closely with my partner, Alex. We hold your hand through the process, and we aim to get you, significant momentum over the next 12 months in terms of that process. Those are the 5 simple steps. So again, most people have this problem. I don't really know what I want. Get very clear on what you want. Then they have a problem. They don't even know where they're starting. They think they've got some good assets, but they're not sure. They've never really analyzed them. So get very clear on where you want to go. Get very clear on where you're starting. Then create a plan from A to B. Imagine having the peace of mind as you go into Christmas going, hey, I've got a plan for 2024 and beyond. I know what I want. That's what a wealth plan is. And then it's all about the execution and the mindset and the accountability to execute on that plan, and then the investment rhythms in terms of it. So hopefully that makes sense to you. Obviously, people could say, well, it's a hell of a lot more complicated. It is, of course it is. But simplicity is the power. If you stick to 5 things, you got far more chance of actually achieving them, which is why we've simplified this, because it's all about getting results. So again, just to remind you, I will sit with you one-to-one in a coaching session. We'll get very clear on your top 3 outcomes, your top 3 measures, and we'll write them down. It's all about the outcome. That's how the entire formula works. It starts with the outcome. Then it's about your starting point. What is your current property portfolio? We analyze it. We go to the family office partner. They analyze what's happening with your annuities, your financial advice, etc. And they say, right, this is where you want to be. This is where you're starting. And then it's about a plan to get from A to B. And then once you got the plan, it's all about the execution. Every month, checking in. Are we on track? Are we off track? All the tools that are there to keep you in a towards state, to help you get results. But ultimately, it's about the accountability tracker and the accountability coach to help you get those results. And then finally, the investment rhythms. Every single month, we're checking in with the Calio team. What do we need to know? What's happening around the world? What's happening with the portfolio construction, with the different asset classes. We go into a financial understanding. Each month, we go deep into one asset class. We did London residential in August. And rather than investing like a mom and pop investor, invest like an institution. Okay, we teach you how to do it from a guy that's, got, literally been doing it for 20 years in London. And then you invest, and ultimately you analyze the deals, and, we work in a confidential environment, which is great. And then finally review, and we review the different deals, etc., and we track the progress. And that's it, ladies and gentlemen. As I said to you, you can look at the feedback. There's lots of other people that have, given feedback in terms of the results. And then you ultimately go back to step 1 in the process. So you have a choice. You can do it on your own. And according to Harvard, you've got a less than 10% chance of even remembering it in 3 months, let alone getting results. But if you do it as part of a mastermind, you get in a non-directive space, and you've got a 95% chance of getting results. And again, in terms of return on investment, over literally 5 years, you're looking at a return on investment of 250%. So in today's money, you put down the equivalent of like $5,000, and you're getting back $12,000 in today's money. Like it's kind of a no-brainer when you look at it from that perspective. And if you take it over 10 or 20 or 30 years, it makes a dramatic impact for investors. So you can think of it from an emotional perspective, or you can think of it from a financial perspective. But it's really, really important that you make the right decisions. And that's why I'd highly recommend go to diversificationmastermind.com, book a meeting, and you and I can chat about it so I can help you make those right decisions. Just to remind you of the bonuses, you get access to the team and myself. You get access to the tax and currency partners and the family office. You get asset class mastery, which alone is $1,997. You get wealth going global, which is the 6 modules, and that's also a home study course that you get access to. You get access to Clem Sunter's masterclass, 12 months wealth hackers, the best immigration agents, and first access to the buyer's trip. So we really kind of created the mastermind to provide the same experience we used to do 10 years ago when you came on a buyer's trip. And that's to really enable people to get close, to get to know each other, to be able to make the right decisions, to make informed decisions, to get to meet the partners, and ultimately to be able to invest. The only difference now, you don't have to jump on an airplane, and you can meet partners from around the world, and you can diversify across countries, across currencies, across assets, across partners, and across time in terms of that process. So if it's something that intrigues you, diversificationmastermind.com, that is where you go, and I'll see you there, and we'll have a one-to-one call at a time that's suitable to you and me in terms of that process. Some more pictures of how we used to do this. So another group of people in Times Square having a bit of fun doing ice hockey, Madison Square Gardens, outside the New York Stock Exchange, buying commercial buildings, houses, having a bit of fun, learning from different partners in terms of that process. A bit more fun, another commercial building we bought. This was an investment committee meeting with Dr. Dolph DeRus in terms of this overall process. This guy, Peter Shilandra, we bought 7 medical building portfolios with him. And he's a top guy out of Atlanta in America. This was another commercial building we bought. A buyer's trip we did to Hong Kong, where we went to go look at buildings and meet partners. We ended up not investing in Hong Kong. More commercial buildings. But I think you probably realized as I lose my voice, tonight, that, I'm very, very passionate about this space. And if you're wanting to build globally diversified passive income, I don't know of a better place or a better way to be able to do it than to learn from someone that's been doing it themselves for 28 years, has learned from some of the best in the world, has equally made a lot of mistakes that I can help you avoid. And, for me personally, that's why we created the mastermind. Like that's the guarantee I bring to the table. And, you might have picked up just from my energy, like I'm an A-type personality, 150%, and I'm here to help people get results. That's what I'm passionate about in terms of the overall process. For those of you who wanted the bonuses, I spoke about, Ray Dalio, and I spoke about my book, etc. You can just go to diversificationmasterclass.com/bonuses. And I know Shane's put the links up in the chat box as well, if you just want to go and click on it. And you can literally go and download those bonuses. We always want people to get value when you come along to a masterclass. So I hope to be meeting you face-to-face in our one-to-ones. And for the rest of you, there are the bonuses in terms of the process. I leave you with a thought. And there's an African proverb: if you want to go fast, go alone. If you want to go far, go together. I started tonight and I said there's 2 types of people. There's the ones that want to do it on their own, and there's the ones that want to, have it done for them. And I suppose the question I have for people is, Warren Buffett says the greatest investment you can make is in yourself. And many, many people have been trying to do it on their own, like I did, for a long time. And in many ways, it often hasn't worked. My assumption would be it hadn't worked. Otherwise, you probably wouldn't even be on this masterclass. And so why not try a different way? Why not see it as an investment in yourself? And through that investment, you're literally saying to your future self in 10 years' time, right, I now know where I want to be. I know where I'm starting. I've got a plan to get from A to B. And I've got an execution and accountability partner to help me get there. I've got someone to help me review the deals, and ultimately I can get the results. And I suppose you got a choice. Back to the African proverb. If you want to go fast, go alone. If you want to go far, go together. My invitation, the epiphany I had, and I hope that you don't make the same mistakes I made, was that for 14 years, I tried to do it all on my own. I went on all the courses, I read all the books, I got all the degrees, I did all the investments myself. And when I started partnering, the whole world opened up to me. And I realized that things like Ray Dalio, when he says 15 quality investments, it wasn't possible with me on my own, but it's very possible through partnership. And that's my invitation. And if that resonates with you, my strong recommendation is book a call, come along to Diversification Mastermind, masterclass.com. And yeah, I look forward to meeting with you one-to-one. And so for me, thank you. If you've got any questions, reach out to me. That's my WhatsApp number. I'm not very good on emails, so I'd rather send me a WhatsApp. And yeah, I look forward to meeting those of you in the one-to-one. You know, for me, it's probably the thing I enjoy most about what I do is the mastermind. It's like a bias trip that we used to do, you know, on steroids, because we're learning from everyone. We're collaborating people from around the world. And so, you know, for me, if you're interested in getting, you know, $5,000 a month passive income or more, you know, $60,000 a year, you know, $100,000 a year, whatever it is, or more, then I would highly recommend booking a call, diversificationmastermind.com. You know, I remind you, there's 5 parts to it. You got the outcome, the starting point, the plan, the accountability, the mindset, and the investment rhythms. And there's a bunch of home study things that we chuck in. But I want to answer just some questions for you that we often get. So the first one is, I'm not sure if I qualify for this. I do have investments, but I'm not a sophisticated investor. People disqualify themselves. Like, you don't have to be a sophisticated investor. In fact, one of the things I'm very good at is dumbing down complicated investment language and making it, you know, understandable for people. And so for me, if you're not sure, rather book a call and we can, you know, have a conversation. And, you know, even if you don't qualify for the mastermind, I virtually guarantee you, having done this for 28 years, I can point you in the right direction. I'm really busy and time poor. How much time will this require? So I say to people, about 3 to 4 hours a month. And again, you know, most of the people that are part of the mastermind are busy. They're successful, you know, in the corporate world or in their own business or whatever. And so they don't have a lot of time. And that's why the mastermind, they want time to be condensed. They want it to be efficient. They want it to be effective, and they want to get results. Why should I invest this money in the mastermind and not in just an investment? Well, again, I've hopefully already shown you that from a return on investment. You know, you can just keep investing the way you've done it, and the chances are you're going to continue to get the same results. Or you can come and learn and partner with some of the best in the world. And imagine, like that other gentleman, if you're getting an average of 7-8% return, imagine if you can change that to a 14-15% return, and even better if it's in a hard currency and you're diversified. Like, imagine how much more bulletproof you'll be in 10 years compared to where you are today. What would that be worth to you? And could you afford not to do it? How can I use Wealth Going Global? So you can buy Wealth Going Global separately. It's a home study course. We created it as a foundation. So anyone that's part of the mastermind, we want you to have the substance. It's there to help you. And so it's literally thrown in, and people have access to it. They can do it in their own time. And you know, for me, the whole objective here is not to overwhelm people, but to make sure they've got the substance and the foundation so that they are empowered to be able to make the right decisions for them and their family. As a class mastery, so again, it's also included in the mastermind, including the previous sessions, which we throw in as a bonus. And the beauty is, so you can go through all the different asset classes, you can talk to the different partners, and then we do one a month, a new one every month, where you learn a new asset class and you meet a new partner with new opportunities. Is this South African focused? No, not at all. So again, we've got people from Ireland, England, Italy, Germany, Australia, New Zealand, South Africa, Zimbabwe, Zambia. So it's a very global community in terms of it. And we're investing in America, England, Europe, Australia primarily in terms of global diversification. Why should I join the mastermind versus doing it on my own? Again, I've hopefully answered that enough times tonight, but in simple terms, if you do it on your own, so be it, but statistically, you've got a far lower chance of success. Plus, it'll take a lot longer and you'll make all the mistakes yourself. And if you partner with people, you can avoid all those mistakes. You can condense your time dramatically and statistically five times quicker, simpler, and safer. You can take all the complexity out because you don't have to make all the mistakes. And you can, be in a group, a like-minded group, where you got the accountability as well. So there's a huge amount of power in a group. And, for me, that's the benefit. That's why I've invested a lot in previous masterminds that I've been part of. What is the relationship with Callio Capital? So they are literally our partner in the mastermind. So they've partnered with us in the mastermind. And so anyone that's part of the mastermind gets access to Callio Capital. And then they help us every month. They help the mastermind. They help us with the information. I can't make the available time slots. What are the options they have? Reach out to the team, chuck in mastermind into the chat box. If you're watching the recording, you had my WhatsApp number there, or reply to one of the emails in terms of the process, and one of the team members will come back to you and find a time that suits you to set up a booking. I really need accountability. Will you hold me accountable? The answer is yes. So, some people, don't quite like being held to account, but if you want to get results, accountability is the most important thing. And so, yes, we've got an accountability framework. We've got an accountability group. We've got an accountability coach. And, whether you need the carrot or the stick, we'll employ whatever it takes to help you get results. Do you have a payment plan? Look, it's not used very often, but our whole philosophy is we want to get the right type of people. And sometimes people are selling their house or selling a business or something. So there's, we do make allowances. So again, go to the link diversificationmastermind.com and we can come back to you with some options. And I think that's all the questions. Shane, I am losing my voice. Is there anything that I've forgotten? I can see there's a question in the Q&A. So Peter asked a question, is the Wealth University Wealth Migrate platform still open for business? So yeah, very much so. The Wealth University is, you can go there. It's got all the things. Wealth Migrate is fully open for business. We've actually got a shareholder and investor newsletter going out tomorrow, just explaining all the deals. It's actually really interesting. So at the moment, out of 16 deals, 13 of them are paying dividends into the wallets on the Wealth Migrate platform. So yeah, I'd say more than working. And may I enjoy the mastermind classes. Yeah, Peter, so a good step for you would be the challenge that's coming up in 10 days' time. I think that'll be very valuable for you in terms of the overall process. Shane, any questions that I haven't answered or anything that I can answer? I know there was one gentleman didn't fully understand. Augustinus here said, 25 million of full paid property lost in 20 years, but my mindset was in line with you. Now you only have a few good opportunities and want your guidance for 24 to present to only 15 minutes. Okay, so I'll just, Augustinus, if you're still here, I'd suggest book a call and let's have a chat. We can have a chat in terms of the next. I'm just looking through if there's anything else. Thanks for the comments. I appreciate them. I think that was all the questions. Let me just see if there's any new ones. Cool. Shane, I'm not sure if you're there. I know you had load shedding. Is there anything that I've missed or any questions from anyone? Nope. Okay. Well, ladies and gentlemen, if there's no other questions, I look forward to seeing you in the 30-minute one-to-one. At the end of the day, I'm passionate about helping people get results. And I always leave you with a question. Michael, 10 years ago, got the same information as hundreds of other people. He took action, and 10 years later, look at the results, in terms of his process. And, 10 years later, a lot of those other people will still be sitting around, with their excuses. My strong invitation is, follow Michael, take action. It's risk-free to book a meeting. Let's see if there's a mutual fit, and let's find a way to help you get your results. So that's my closing statement, everyone. Have a wonderful evening. If you enjoyed this, and you think it's right for someone, share it with your friends. And, if you want some more information, we've put a challenge together, which is the 23rd to 27th of October. So it's going to be lots of fun, more detail, and watch your emails. We'll send more information on that. Cheers, everyone. Have a wonderful day.